Hey, welcome to CryptoCoach365, day 88. Michael Tozoni here, and it's about 1 a.m. Uh, yeah, I've kind of been busy, almost forgot about this, but it's a daily kind of deal, so no excuses, gotta get it done. Very productive day today. Um, let's see, money that I lent, had to borrow more money, so that took a little while to transfer. That came in today. So sent out and delivered in person a couple of checks to some of my contractors who are working on my properties. Um, one of our banks that one of the interesting story actually that I could talk to, that could be a topic. I had to go to the bank to open a bank account for one of my corps, and this corporation that we just opened specifically. So there's a bit of a trick with regards to when you have real estate. Well, the main thing that you want to do when you have real estate, the main thing that you use corporations for, is to protect yourself. So it's an asset protection kind of a strategy. It's also a way to greatly reduce taxes, but the reason you would have so many different corporations where you have each corporation owning a separate property is for asset protection. Basically, if let's say, well, let's say I have 3 properties, and if something happens to one of them where, let's say the property burns down, somebody gets hurt, the tenants or the owners of the property can go after the corporation itself. They can't actually go after me because I don't actually own the properties. The properties are actually owned by the corporations. And if they happen to win in a court case or whatever, or if it's very obvious that there was an actual fault on, let's say, my side or the corporation side, then I will basically lose the corporation. I will lose whatever the corporation owns. Because this corporation owns this property and nothing else, the only thing that I will lose is that specific property. They can't actually go after all the other properties that are owned by the corporation or by me after me personally. So because in this way, because I have separate corporations owning separate properties, I can keep all my properties and all my investments kind of gated away from each other, so they're completely separate, and if anything happens to one, it's not going to affect the other. But as I found out, as I've learned actually, one of the main goals or strategies, I guess, for doing asset protection is not just the legal corporate protection, but making it seem so that there's no money in going after whatever you're going. Because what usually happens when you get sued is like something happens to somebody, like a tenant or whatever, and then they go to a lawyer, and the lawyer, they say like, hey, this happened to me, I want to go after so and so, will you please take this case? So the first thing that the lawyer is going to do is they will research the assets that are owned by that corporation and see how much money is actually in that corporation. Because chances are the lawyer is not going to be paid by the person directly. The lawyer is hoping that what will happen is they sue the corporation, there will be a large settlement, and then the corporation that has a lot of money will pay the settlement, and out of that settlement the lawyer will take a very sizable chunk. So what you do by spreading apart your properties into separate corporations is making it so that there's not as much money in that specific corporation. So for example, let's say I had 3 houses and they're each $100,000. A lawyer might look at, if they're all under one corporation, the lawyer might say, oh, there's $300,000 in there, that's a lot of money. If each house is in its own corporation, the lawyer will look at one corp, only see that one house, there's $100,000 in there, and it's not as lucrative to go after. Excuse me. So that's kind of the basic strategy. The other strategy, and this is the corporation that I just opened a bank account for, This is kind of a way to hide equity from, I guess, anybody who might want to look at it. So what happens when you own a rental property is that as the tenants are paying down your rent, and hopefully for any kind of property that's mortgaged, as you're paying using the tenant's rent to pay the mortgage, or as you yourself are paying down the mortgage, you're paying down the loan on the property, and you have equity, which is the amount of the house that actually belongs to you at that point. So let's say you bought a house for $100,000 and you spent like 5 years or so paying down on this house. After 5 years, you'll probably have about $10,000 or $20,000 worth of equity in the house. In other words, now you're only owe $80,000 to $90,000, and the remaining $10,000 to $20,000 belongs to you. So in this case, again, a lawyer can look at this property and see that, let's say you've had this property paid down for a very, very long time. Let's say 50% of it is done. So a lawyer will look at the property and they'll see that there's a loan from a bank for $50,000, and the other $50,000 is now owned free and clear. So if the lawyer goes after the property or after the corporation, they assume that they will get paid the $50,000, of which they'll be able to keep a large chunk. So this other new strategy that I'm doing, where I just set up this bank account for a new corporation, is basically this second corporation that I will have, or I guess in this case, if I have 3 properties, 3 corporations, and another 4th corporation on top of that, this 4th corporation is kind of a bank corporation. So what that corporation will do is, once I have equity, let's say I have $50,000 worth of equity, this new corporation will actually issue me a home equity line of credit against that $50,000. Basically like a HELOC. You can go to any bank if you have a house, and you can request a HELOC against the portion of your house that was paid off, the equity. And in this case, the exact same thing will happen, where I can use this corporation, my bank, quote-unquote bank corporation, and I can have my property owning corporation request a loan, a home equity loan of credit from my bank corporation. My bank corporation will issue a $50,000 loan to that corporation and put a lien on the house for $50,000. As I found out, you don't actually need to distribute the loan, you just need to have the equity in there. And in that case, you just have a lien of $50,000 against the house, so that if a lawyer looks at this property now, this corporation, they'll see that of this $100,000 property, there's $50,000 is mortgaged, and the other $50,000 there's a lien against it. So again, they'll see that there's no money in this property to go after. There's all the money on the property has been lent out. If the lawyer does actually start digging, or let's say there's a major thing going on and they start digging really hard for it, they could actually find that there's just a lien and nothing else, in which case they can still pursue it, and what they would basically end up with is the lien will get dismissed because there's no actual loan against it, and then they will still take the $50,000. So in that case, if I really want to protect myself, what I can do is actually issue that actual loan. So what will happen is, let's say I would borrow, I take my own money, I would lend it to the home equity line of credit, my bank corporation. My bank corporation would then issue that home equity line of credit to the property for the full $50,000. Then that property will have $50,000 in it in cash, which it will then basically pay it back to me, because the property was initially bought with money that I lent to it. And then the money basically goes from me to the bank, to that corporation that has the property, and then back to me, because that money is owed to me. But now, instead of that money being owed to me by the corporation that owns the property, it's now owed to me by the corporation that is the quote-unquote bank. So now in this case, if the lawyer looks at the property, they'll see a lien for the $50,000. They'll actually see an actual loan, a home equity loan for the $50,000. Excuse me. And if whoever it is that actually does actually pursue this property full force, what'll happen is the bank that has a mortgage will be always in first position. They will take their $50,000 mortgage. And then the bank corporation that I have will be in second position, so they will take their $50,000 home equity line of credit. And then whatever left with zero basically would go to whoever is pursuing this property. And then this bank corporation out there, that will be, it'll basically get my money back before anybody else gets to that money. And in that way, I am pretty much completely protected from any kind of lawsuits or anybody going after me for any kind of, I guess, damages or whatever. Of course, this doesn't protect me from criminal liability, because criminal liability does not get protected by the corporate veil. If there are severe kind of injury or severe kind of I mean, usually what happens was very severe kind of stuff, like somebody gets really hurt because I did something really, really stupid. That can get into a realm of criminal negligence, I believe. So in that case, it's still not going to protect me. But if somebody just wants to sue me for something stupid, something minor, or they're just trying to extort money out of somebody, thinking that they have a lot of money, this will pretty much protect me completely from any of that kind of stuff. So yeah, that was my corporate that I was setting up today. And then besides that, in the evening I had a call with my accountant, so it's a couple of more hours of learning how to use QuickBooks to actually manage all these crazy corporate structures. At this point, I believe I have like 14 different corporations that I'm juggling between that do different stuff. Some are holding assets, some are holding real estate. One of them is for the plane, and then the bank one, and then there's like umbrella corporations, and it's a big mess. But I mean, if you just look at it, it looks crazy. Once you actually figure out why and how to use everything, it's pretty straightforward and everything makes sense. So yeah. With accounting, it's a little more messy. Luckily for me, I just need to know the basics and kind of the overall big picture, as well as how to enter stuff correctly if I wanted to save a little money on entering stuff myself instead of spending my accountant's time, which with today's phone apps is pretty simple. Like when I go and have an expense, I whip out QuickBook on my phone, add new expense, take a picture of the receipt. I don't even need to save a copy of the receipt at this point. Just enter the information, hit save, and it's already in the account. So yeah, that saves a lot of time versus having to go through all the receipts at the very end of the month and trying to remember what the heck this was for and all that kind of stuff. So that was massive headache I had to deal with for a long time. And yeah, that's it. So tomorrow, just gonna be visiting family, I guess. Haven't seen them in a while, and probably more payments on another contractor stuff, and probably a lot more accounting. And then after tomorrow, it's closing on a new property and flight to Chicago, because I gotta go see my business coach JT, because I haven't seen him in a while, and I need a bit of a boost, and I need to discuss some stuff with him. So anyway, that's it for today, I guess, and I'll talk to you guys tomorrow. Bye.